Hey everyone, welcome to today's video. We're going to talk about XRP. Can it really go down to this low range? We're going to find out. Clean chart, let's get started. So welcome everyone, I hope you are well. If you are wanting to learn more about technical analysis and all kinds of good stuff, check out the link below. Obviously subscribe to the channel, press the like button, comment, and I will be doing a Fibonacci video as requested. I'm going to feature it in here, so I will do a full breakdown of that in a future video. If you want that, let me know. But yeah, premium below, free to get involved. I do daily updates like this all the time, so if you want to get some profit in the markets, go ahead and press that button. So let's talk a few little thingy bobby doofus, right? Monthly chart, XRP US dollar. Now, I'm a fan of XRP. People like that, people don't. I think it's a good investment opportunity at these low levels for the long term adoption and kind of stuff like that. A lot of people have bought high and sold, and a lot of people's mindset is to buy coins when they're successful in price, not so much successful in technology. So be wary of that. So also, sorry for my squeaky chair. Happens. So we're going to do a top to bottom analysis of this. Now it might be a long video. This is more of a lesson as well in reality of understanding how market structure is kind of formed in cryptocurrency. It's not the best in terms of cryptocurrency having structure. Trend lines are an issue, stuff like that, you know, that sort of thing. But we're going to do a basic structure, and we're going to start. We're not going to do it the monthly because there's not much really to go on. If I do zoom in on this enough, yeah, there's some key monthly levels, but you could probably argue you can probably avoid it for now. So we're going to start off with the weekly. So all we're going to do, we're going to put in some levels to kind of understand where this market is. And we're going to start putting the Fibonacci on it to see potential predictions. So if you want to learn something, you're probably going to get a lot out of this video in terms of top to bottom analysis. Okay, so understanding from the weekly, the daily, the monthly, those the longer term time frames. A lot of people forget about those monthly time frames, those weekly time frames where the long term picture is. If you're always on a 15-minute time frame looking for that quick buck, you're going to miss out on the big move, the big cataclysmic move that could potentially change your trading portfolio for a much better obligation of profit. That market is going to give you some really nice rewards if you're finding certain moves. So the first key level that I would easily put on this chart here is this level here at the bottom. Weekly wicks, right? Remember weekly wicks, right? I'm going to bung that there. That is weekly level area, right? Really, really cool. We're going to obviously clone that because it's easy, and then we're going to find the next area of interest. Now this area here is really of interest. Look at it. That whole area there is resistance, support, resistance, resistance. So that is a weekly band as well. I'm not going to go too OTT on this. I'm just going to put 3 levels in, and the next level you could probably argue is here, okay, where those wicks are there. There's a potential area. Now, I'm not going to try and make this turbo neat. I am quite OCD with my charting. I am now anyways. I never used to be. If you look at my old videos, you see how messy they were, but I've kind of like sorted my life out a little bit. I went to chart rehab and sorted my life out. But you can see there, look at the weekly wicks where certain things have stopped and turned around. For example, their bodies have turned around, obviously through, in and around. This area is a bit wishy-washy, but you've probably got a lower level on the daily on there. We'll look out for that. And again, wick there. So that's the weekly chart area done. Now I'm not going to go up here because we're not even interested in looking at this. We're going to look at current levels. In the future, we'll obviously plot that as you would go on. Same with the daily. Now the daily is a little bit different. You need to zoom in on current price levels in a way. Don't go too deep. Don't go too far away, because you're not going to be plotting stuff at like 50 cents plus at these certain levels. You're not going to. So again, you need to zoom in a little bit more to see current price levels, and again you're going to use a rectangle box and you're going to find daily bodies. Daily bodies are of interest. So for example here, this whole area here is an interesting area, and again if you just zoom out and you have a little look left and you put that crosshair on that region, there's a definite level there. Now I'm not going to go 2 balls deep, and I'm just going to basically do it from this level here. I'm going to make it a little bit thinner to kind of highlight that this is a smaller level, but it actually covers support and resistance. Okay, so again, if you zoom out on this level and you then color it into a different color, and I have mine as pinky purple, which is kind of cute, and that is a daily level. And again, what we're going to do, we're going to make this one a little bit bigger, actually a bit wider, so it kind of does fill up a bit more of the chart. So that is a daily level. Okay, key area of interest. And again, what we're going to do, we're going to go to the clone chart and we're going to go and put this here. It's kind of an obvious level in my opinion. You're looking at it, obviously support, almost a tap, back in support, obviously up to the weekly level, back in, resistance, down to this level, resistance, or resistance here, up. When you see them and they look obvious, you'll start to plot them really, really easily. And when you start going on to the lower time frames, you'll start to see, oh, fuck me, that is amazing. And when you put the Fibonacci on this, you'll see this. So now this is completely from scratch, a complete scratch chart. I've not pre-done this because I can't be bothered with wasting my own time. I'm going to put one more in. I have a rule of 3. Current price action, rule of 3 every single time. I don't go too balls deep because it will ruin the chart. And again, this one is a little bit more cluttered because of the levels, and the next one is obviously here in this key region here. You can kind of see how it all works and plans out, and you don't even have to zoom in that much, just kind of see these levels, and you can kind of have a little look at it and go, right, okay, what do we look like? Well, that looks a lot neater. You can see this is a whole level, went through it, obviously resistance, broke through, support, boom, boom. Once you start seeing it, it makes obvious sense. Now, one thing I am going to edit though on this, just to make it a bit more clear cut, I'm going to edit this to make it look so it's a bit neater, because it's a bit big at the moment. And you're probably screaming at the chat going, they're massive, those. Yeah, they are. Apologies. Let me just make this a little bit neater too, because it needs to look the part. There we go, that's a bit better. Where's the other level? It's fucking huge as well. We'll go towards the wick side more than the bodies. There we go. That's a bit neat. Sometimes the sizes vary depending on the wicks and stuff, but that's all right. That's better. There we go. That looks a lot neater. So there you go. Right, you got this whole key range here. Now we've obviously failed, came back down. This is the next level. Obviously there will be other daily levels in and around this region, so don't worry too much about it yet because we're not there. You know, you don't want to have a chart full of everything, because when you start putting Fibonacci's on it, it'll start looking rather messy. So then you go to the 4-hour time frame. This is where you need to use a different sort of tool, horizontal lines, and find areas. Now that is the obvious area. Look at that, right? Oops, apologies. Again, you go to the bodies or the wicks. It doesn't matter on this one. You can give it a bit of flexibility. This is crypto, remember. Wicks are horrendous. So that is a key level on the intraday levels. And again, we've got another one here. I'm going to bung that right there. As you can see here, cool, cool, cool. Now when you start zooming in on this level, you're going to start seeing another level here, and you're going to place that one on there. You got a wick closure and body closures, kind of obvious, and it's a key level. And you've obviously got this weekly level. So this is kind of where we are right now, price action. We've turned around, we've rolled over here massively, and this is going to play an importance soon. So this is kind of the analysis that you need to be doing. Obviously this is where we are. We don't really care about all this stuff up here because it's kind of gone. If we do go up there, we move the intraday levels with it. The intraday levels should be always adjustable. You should always be able to move them, plot them, and again, don't put more than 3 on your chart at any one point, because you're going to start getting fucking completely cluster-minded. Again, there's a smaller level here, but don't worry too much about it because you know it. You can see it with your eye, and also you've got a weekly level here, so just be mindful of that. Again, on to the last part here now, onto the intraday, proper intraday stuff, the day trader, the kind of, you could probably argue that the 4 hours intra-week, intraday is more this level here, so apologies. You're looking for the next level, so you're going to use a ray tool, and you're going to look for key areas where things have turned around on an hour. So this is one area here, you can kind of see it, bosh, that 2 candles there, you would not see, you just see a horrible wick on the 4 hour. That is one level there, in between there. You could probably put another one in quite easily. Bear with me, let me just get my tool out again. You could probably put one down here, but we're not going to just yet. I would put one, if I'm going to be really honest, I put one on the top of this weekly level here. You can just about see it, but there's definitely one there. And if you want to be really picky, you could probably argue one right in the middle of here, but I'm not going to bother with that one because I'm going to show you something else in a second. So that's kind of what you'd do. You'd kind of have these kind of levels marked out, and you'd go from level to level. Now when you start zooming out and go to the daily time frame, for example, and you start looking at things, and you start just analysing where price has actually moved, and you start looking at this current phase, you're thinking, that's pretty neat and tidy. It's a kind of, I know and understand where direction is going. Now when you start adding other indicators in here, like the RSI for example, this is a key level. Obviously overbought, oversold conditions, all kinds of stuff you need to make a note of. Make sure you understand it, and again, I could do lessons on that if you so wish to, but again, remember, I do have a full course that goes over this in much more detail. So if you're just seeing what content I can do here, obviously have a look at the courses, and you know, I have premium as well within my company, which is totally free to get involved in if you want to learn some stuff. And I do this sort of stuff every single day for people. It's pretty cool. So that is XRP as it stands. Obviously we've got a key level up here we need to be mindful of, but we're not going to chart that on just yet until we start getting a bit closer as a target level. But what I want to show you now is using the likes of the Fibonacci, which again is going to be a basis of where our predictions are going to lie. So that is current market structure. We're looking at this current level, but if you want to go a bit deeper, you can go on the weekly levels if you so wish to, and you can start looking at maybe this level here and see where we actually fell from in June if you wanted to get a real longer term scope. But actually I think the scope's already happened here. I think if you look, if we just put this wick here to this floor here, for example, you could probably argue, well, actually, we've already done exactly what it wanted to do. When you look at this and you think to yourself, well, what area could this be? Even to this weekly level here, they're getting very, very close to where the price action was, which makes you wonder how valuable the Fibonacci tool is. So, for example, here, look at this. Just to give you an insight. Actually, no, we're going to go to this level here, just to kind of blow people's minds a little bit. Right? I don't want to blow too many people's minds. This here is like the bread and butter of why Fibonacci should be used in the longer term time frames, because you've got this big drop point here, and this is the bottom. This is the start of the relief rally. We went all the way up and wicked to the 0.5, which is a 50% retracement of that entire drop, right? So it's a psychological level. It is not a Fibonacci number, it's a psychological level, 50% of retracement. And then obviously we rejected fully off the 0.382. We've obviously slammed, right? We've slammed again. But we already know that we've already been quite low. This is obviously the weekly time frame. I would say, and I'm not going to try and scare too many people, we could be going down to the 0.075 as a level, right? So remember that. Remember that number, which is obviously a key level. So remember that number there. Actually, should we just do that? Yeah, we'll do that. So you can kind of see it, nice and easy. That is a weekly level, right? If you go onto the daily and you start looking at how it kind of shapes, it's perfect, it's precision. This is market structure. Look left on this level, look at it. Look at how that is perfect. This is why the Fibonacci comes into its world of its own. It beats every single market structure out there. But when you start looking at market structure, look at this box here. Perfect, in my previous zone. If I zoom up again, honestly, it will blow minds. It will blow minds. So I'm going to delete that now. So we're going to look at the daily now, a bit more closer to home. So that's weekly longer term levels. That was to predict that previous move. We're pretty much going to go even lower potentially. But we're going to look at this drop point here. Have a little look and see what could be happening here. And one thing as well that could blow people's minds as well. I'm going to try and zoom in a little bit. There you go. So we're only focusing on this level here. So from the start of the year to now, which is quite a long time, daily levels. Now, this is one thing that people forget. If you do a retracement and say current price levels, right? Look at where, look at the move. Up to here, we've retraced down to the 0.78 levels, right? As a retracement. So the breakout, the retest, off we go, trend continuation. Look at where the take profits are. You got 0 there, you got the 0.309, and you got the 0.618. Nearly got the 618 up there, but obviously it does it later date. When you start like bedding in all these retracements, it kind of makes obvious sense. And again, on the way down, you can do the exact same thing. So you're looking at this on the way down, you see this double bottom area or the wicks, and you think, right, shit, I need to get in this chart somewhere. Oh, 0.5 is a potential area, 0.382 is an area as well. You start looking for the rollover, and when you start looking on the lower time frames and you see the rollover, the daily time frame is going to follow, then you'll enter on this weekly level. Simple, really. Trend continuation, a little bit of a tip for you. So with all that, cool, right? I'll do that in more detail in a few minutes. So we're looking from the bottom of this area, and we've identified that this level here is the bottom, right? Simple as that. But what I've came to realize is we have not retraced enough yet, or a potential fail. With cryptocurrency, there is another level here. I don't have it on my chart. Okay. Now, in my eyes, I think we've already hit it. There's a definite level. I just don't have it on because it doesn't always have a big bearing due to the fundamentals of cryptocurrency. So I tend to avoid it. I prefer these levels because it's better. But when you look at this in the daily, we could go up to a certain level, but with Bitcoin and Ethereum, they've already done it. They've already hit these levels and they've turned around. I'm pretty sure with XRP, it just doesn't. At the minute, it just doesn't move as much. It's a bit weird. So that there is to be, be mindful of a potential rally upwards. But I think we're going to have further downside to come before a potential rally back up. So don't always count on it. So I'm pretty sure if I put in another level on here, 0.238 I think it is, or something like that. It's similar. It's kind of like in and around that level. I think it is that level actually. So it has hit it. So that is the other level that you can use. I'm pretty sure it is. Bear with me. Let me just make sure it is. I've not used it for a long time. See which one it is. 236, not 238. Bear with me. Let me just change that. You're probably shouting at the screen going, no, it's a 6. It's a 6, not the 8. It's a 6. There you go. So I've added it to mine now. So that gives you an insight. It has actually hit a pivot area, or not a pivot area, but a retracement area. But if you look left, look at where this pink line is. Remember what that pink line was? Remember it? It was this level here. So in and around that level, I wasn't far off. Again, looking at my manual levels, wasn't far off. Manual level, wasn't far off. So always remember your Fibonacci. It's really, really good. So what we predicted now? I'm predicting. Should we have a look, see what that pink box is? We could actually go lower than that pink box, but I don't want to go too deep, right? I want to remember that as a weekly level. I think we're going to go back down to 10 cents. If things get really bad, we could go down to 0.036 if things get really bad, but it's very, very unlikely. But I do think that this area here is going to be an interesting area. So what I'm going to suggest is these are your two levels to make note of, okay? Make note of that level and make note of this level as a potential area. So this is from the weekly level, potential downside movement. This is also from this level here. If we're looking to go back up though, and we are looking to potentially go to these levels and go back up, you just got to start looking and thinking, well, actually, where can we go? Where can this move retrace up to? And you've got to look at this previous level here. And if you start putting like the Fibonacci from this top to bottom here and do the retracement and go to that top level here, potentially got a level up here at 40 cents and then possibly up to the weekly levels at 0.618 at 45 cents. So that acts as a little bit of an extension there. But when you start looking at moves and looking at the likes of the Fibonacci stuff, it definitely is worth doing it, but we need to retrace back up. But when you start looking at the monthly time frame and the weekly time frame stuff, you're looking at the monthly time frame here, we're going down. This is a bear trend, boys and girls. It is coming down still. So don't get too bullish about it. Don't get too excited about it. But when you start looking at the chart and delving in on this time frame here, look at where we're going. Look at this. Lower, lower, lower. Double top pretty much. Lower. So even on the weekly, it's looking pretty horrible. But as investors, honestly, I do believe this is a really, really good one. This is a really interesting candle as well, this weekly candle. It's closing very, very soon in 12 hours. Let's have a look at it. It is a doji. It is a manual candle. It is pretty much going to be... It's an interesting candle. Could go either way if you're going to read candle analysis on that. If you look at the daily time frame, though, it doesn't look as clever. Obviously, you have this bullish engulfing candle, you've had this pullback, and you've got a neutral candle here. This is not a good candle. This is a definite pullback candle. This could be a rollover back into this level, which is kind of an interesting point that I want to bring up, that we have hit that Fibonacci level, which is here, which I've put on my chart. So with cryptocurrency, that chart is a bit better. But when you start looking at likes of Ethereum, just to draw on this one, this is where we are with Ethereum. Okay, this level here, we bounced all the way back up to the 0.382 on this one, and we are looking to roll over down to $104. When you start looking at the lower time frames, you start looking at what structure is on this level here, going up. We went all the way down to here. We retraced back up, and we've touched the 0.618, 1, 2, 3, almost 4 times, and we're starting to roll back over. And this is why I'm saying that the ABC kind of methods what you can use, where you can go on the lower time frames, you can find out where it could go. This could be an area here back to 114 or 108. And again, if I go into XRP, let me just get that chart back up. I know this is a long video, but you might be enjoying it. Who knows? you might be writing a load of notes thinking, oh my god, this is mental. When you start looking at the intraday time frame on this one, is that the right chart that I had on before? I don't even know. Bear with me. That one, boom. So when you start looking at the 4 hour time frame on the intraday levels of this, just to give you one final point on this as a potential thing. So when you start looking at this move here, bang, right? The retracement up here, what have we got? We have got this going all the way up to this level here, and what's happened here? Sorry. We've hit this level here, and we're trying to go back up. We're starting on a retracement point here, but what we want to try and do here is go the other way around. We want to try and make it so you can kind of see what's happened in the past. So when you start looking at this level, it's more interesting. So when you start seeing, well, actually, when you look at this level here, for example, what is it doing? Went all the way up to this level here. We've turned around. We've went and hit the 618. Cool. But what have we actually hit from this top level to bottom? You start getting pretty deep with it, and you start seeing, well, where's it actually going? Well, actually, when you start looking at it that way, we've actually went onto the 0.5, and we could be actually rolling back down into this level anyways, because this has confluence between everything else. So when you start looking, I know this is pretty deep now, when you start looking at the likes of these drop points here and where they actually retrace to, you always see every time retracement 618, we're coming back down. Continuation of the trend here. This is an entry point, because when you start doing this, from this level here to that level, and you pull it across, it's a 0.5 on that level. And actually the 0.382, it actually holds, and then trend continuation. So I think this is an end of a rally coming up very, very soon, because when you start looking at, well, when we pull back, it's a very, very vicious pullback from this level here up to this point here. It's a very, very vicious pullback of this wick, and it holds on this support level. But when you start thinking, well, where could it go? Well, this here to this bottom here, it's pretty much topped out on this, in and around this region. So this could be a key level of a potential rollback down, and it could lead to some real big drops into these regions if it is a total rejection and we fall through these levels, which could be interesting. So there you go. But longer term time frames, don't forget them. Please do not forget them, because you know they are vitally important. When you start looking at the weekly time frame, you start looking at these key levels and where we could actually fall down to, well, these areas here could be very, very important. I'm going to leave those on that chart so I can kind of remember them. Let me just make sure I document this correctly. I'm going to make them purple. Really, really obvious levels. That is pretty disgusting. So yeah, I hope you enjoyed today's video. These are potential levels that we could fall down to. And just a final recap of this in terms of how I potentially got these levels. You're looking at this region here. That level there was kind of the key level where it went all the way back up to, and then that would give you your area. I don't even think that was the right level, but it's very, very close to that level anyways. In and around that region anyways. 8 cents we'll say.